The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is June 3rd. Welcome, and this is the Tiger Technicians Hour, as you just heard. My pleasure to be here Monday through Friday, 11 o'clock till noon on market days, and to be following Steve Rhodes. Great 2 hours, of course, starting at 9 o'clock Eastern Time. I come in at 11. 12 o'clock today, you're going to get the Options Hour, just a fabulous show put together by Think or Swim. Not sure if North is doing it today, but in the meantime, back at the ranch, what we're looking at is a full day of programming. You've got Daryl Martin, you've got, let's see, so Daryl comes in, then you've got Dave White, then you've got Andy Hecht, then you've got Tom O'Brien. Just a full day, right through till 6 o'clock. So please stay tuned, and let's go to the numbers. The Dow's down 42 at 16,700. The S&P is down 4 at 1920. The comp index, and this is going to be very interesting, is down 9. It was weak yesterday as well at 42.28. And you've got gold up 1 at 12.45, trying to have a little bit of a balance here. Silver's up 2 cents at 18.78. Platinum is down 2 at 14.32. You've got high-grade copper, and I just want to check. High-grade copper, HG, I'm not sure which contracts. I've got the continuous. I've got it as making a peak E. Yep. There it is. Peak E in the daily. And what's going to be very important in this particular instance is how on earth we analyze copper in relation to the peak C that it's just made in the weekly chart and this monthly chart, which is just a horrible, horrible chart. But it is bouncing off the lows back at the 2.84 area, and we're at 313 right now. And the reason why I'm talking about it at all is that it really portends different things at different price levels. And in this area, that's kind of okay. Up at the 3.36 area, that would be very good. And dropping below 3 again would be very, very poor, because it's probably going to make an arch formation and test the 290s if that's the case. So I'm watching copper very closely. You've got bonds. I'm watching bonds very, very closely. Look, the TLT made a peak D and has pulled back for four sessions from that high of 115.19. It's within an up channel. The weekly chart has got a peak E in the making if there's no new high this week. And even more important than that, you've got this trend line support, which it's in right now. It's called the inside track in the Chapman wave methodology. And this inside track, when you go from a channel, outside channel to inside channel, well, let me put it this way. You go from the upper inside channel to the lower inside channel. The one is a repellent line, and the other is a propellant line. We're into the propellant area right now. If the TLT takes out 111.60, let's call it 111.50, it's at 112.24, it's less than a point away, closes under that, that'll be a negative. That'll say, hey, there's a good chance the weekly is going to make a peak E here, and you got to watch out, because that trend line resistance from the monthly has not been pierced to the 116 area. So watching that closely, we'll go to bonds. At US, I'm just doing the continuous contract for now, hasn't pierced that either. Peak D in the weekly, peak E in the daily. I'm watching this closely. If the bond's at 134.5 and 26.30 seconds, takes out 134.15, let's call it 134 for safety's sake. It's only a point, 2 points down. Breaks 2 points down, and that's going to be a big negative both in the daily and the weekly. And we've got the dollar. Now, this is going to be very interesting. With all this fuss and everything, the dollar has struggled for the last week and a half to clear the 200-period exponential moving average of 80.41, hold the 9-period moving average, which is done very nicely, but it needs to clear that 200, it has to treat it not as a magnet line, but as a propellant line. And where is that 200-period moving average? It is at 80.31. 80.41 is the 9-period moving average support. So we tried it this morning, tried to tested it successfully. Now the dollar fast-moving average in the MACD is good. It is flattening out a little bit, and the stochastic still at 85, but it's pulling back, so that's still good. Now what we're looking at is the EUR. This is fascinating. Watch this, EUR USD. This is the currency pair. Just a little kind of blip off the bottom, and that 200-period moving average now is resistance. It's like a repellent line for the poor old EUR USD. That's the euro-dollar currency pair. And look at this, USD JPY, strong leg B, a little bit like the dollar, but it is nicely above any of its resistance levels. I'm almost about to put in an up arrow, but I won't until I get more confirmation. Weekly chart, nice bounce. Only I have to treat this as a bounce, but hey, a bounce from 102.439, whereas the dollar was down 10 cents. The USD JPY is up 0.07, and it's trying to make the 9-period moving average, that black line in the middle chart. So it's daily, weekly, monthly on the right. So we're watching this closely. Now, here's another one. EUR JPY. Now, I don't follow this all that much. I know Steve spends a lot of time on the EUR JPY, the Euro Japanese currency pair. And if you're looking at this, this is a nice bounce off the bottom. In fact, it's a bounce with the technicals concurring. The weekly of the Euro Japanese yen currency pair shows right here. It shows you that that's the resistance. So it's making what we call a symmetric triangle. In other words, the angle down and the angle up are the same, and they're coming to an apex, coming towards an apex. Haven't made an apex yet. If the EUR JPY breaks under 137.56, very bad. It's at 139.58 right now, up 0.39. If it takes out at any point in the next 2 weeks, it takes out 142.20, that's very good action. Then it's starting to go towards the top of this entire range. And what that says is that I've got to put the up arrow in the monthly. I had this notated, but I'll redo it. A, B, C, and then you're going to go for D. And that D could, in fact, turn out to be in June going into July. That's how quickly you can move. All right, so a couple of questions. Let's see, EWJ, I was asked about, I had a question, could I look at EWJ? Yes. So EWJ, this is fascinating. Got to redo it. EWJ, yep, that's it. So this is peak A. Folks, all I do is I identify the lowest, most obvious low bar in the Chapman wave methodology. That's the easy way to do it. And we're making a peak E. There's no new high today in the daily EWJ. That's the iShares MSCI Japan ETF. The weekly chart, wow, I had these so beautifully notated. Let me do that again. This is an A, right there. A, B, C, D, E, and that's pulled back. It's making a cup formation. If the EWJ trading at 11.70 is able on Friday, this is a weekly chart, on Friday, if it's able to clear 12, it's at 11.70 right now, down 2 cents. Let me make this even clearer. Yeah, if it's able to clear 12, that's very positive action. If it fails and it goes below 11.37, it says, uh-oh, be careful. Trading range just kind of stuck. And the monthly chart just keeps having these moves. I can't even call it a stair-step move because it's just one of the weirdest chart patterns I've seen in a long time. A, E/B. Yeah, same thing happening. 11.15 is the 200-period exponential moving average support in the monthly, and it really needs 12s. The minute it gets to 12s, doesn't even have to close there. If it just touches 12.01, I suspect it's saying to us the trend is going to continue higher. Now, it could be that Japan is doing the same as the Fed here, just pushing money out. Very easy to do that. And as was mentioned, as a monster rally, I'm going to do this because this is the pattern that immediately comes to my eye. It's the monthly chart rectangle. And all it's saying is within the rectangle, it's trying to move between the upper part and the lower part. And very nice percentage gains. But the major trend will be only confirmed this Friday if it doesn't pull back, if the doesn't go under 11, doesn't close under 1160, but instead closes closer to 1177, 7 cents higher than it is right now. That'll be a positive. Okay, so now I want you to do a couple of things. I wrote it down here. I remembered to look down. Tuesday, monthly. Oh, look at this. CLVS. Oh, it didn't do it. Okay, well, I thought it was going to make a monthly gap down. I saw that it gapped down. I've looked at this before, Clovis Oncology, a biotech company. I thought it was in a gap down. It's down 7.74 at 40.01, down 16%. I was thinking it was just going to gap straight down and open below 43.86. It didn't do that. So that was going to be a beautiful example of an island gap, a monthly island gap reversal. You don't often get those. It isn't. I thought it would be, and it isn't. So, Basil, on copper, do you factor in the role of the use of copper in massive Chinese financing schemes when assessing price outlook for copper? So there's a question in the den by Zitao. And the answer to that, I'm kind of tired of factoring everything else. I did it. You remember when Newton North was going to be built here in Newton, Massachusetts, just down the hill from where I live. I live on West Newton Hill. It was just at the bottom of the hill. Was the old brick building of Newton North. Actually, I say old, but it was a brick building. It was only 50 years old or something like that. I mean, a brick building, 50 years old. They knock it down and build a brand new, almost a college for $200 million for a high school, size of a college. When that was being negotiated, I remember being on air and saying, why aren't these people negotiating the price of copper? Why aren't they negotiating the price of all the materials? We're making a major screaming in the wind. Nothing happened, of course. They paid the top dollar, absolute top dollar. And then they bragged because they came out $5 million ahead because they had actually budgeted that extra $5 million. They were never ahead. And, of course, we're paying the taxes for that. I have, a long time ago, and I remember China was in fact very influential, giving up on doing the fundamentals on high-grade copper other than to say that if copper is running strongly, it's a good sign. If copper is failing to run in its weak, it's just not a good sign. So I probably should, but I haven't. And I just find I do well enough looking at the price chart itself, doing the analysis based on the Chapman wave. So the answer is no, probably should, but I don't. I'll be right back. 877-927-6648. Dow's down 32, S&P is 3.5, and we'll talk about the market as soon as I get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I just wanted to clarify. So when I was talking about copper, I was talking about Newton North, of course. The point that I was making was that when prices continue to rise, and then they get to, in this case, copper almost had bubble kind of action. To be able to do the fundamentals, it means that you have to also include, not to be an economist, but to be a market analyst, a technical analyst. If you include the fundamentals, you have to project out the patterns that you're looking at. Whereas economists tend to project the direction of the previous number of data points, and if they are moving higher, they have no choice but to continue that particular aspect until there's enough evidence, and usually it is with lower data, lower price data, or if it's going up, it's higher price data, and that can take months. That's why over the years, way back, I used to always, as soon as it was announced that the recession was over, I would get so cautious in the market. Why? Because that's when the market had already moved up and done everything it had to do. It had climbed the wall of worry, and now there's no wall of worry. Right now, we're getting to that very same instance where there's very little that is very negative in the market. There are very many positive aspects. Market's been treating it positively. If this stealth pullback that started overnight continues, then it won't be. We'll see copper probably be pulling back in this low highs, low lows scenario, and it'll take out the low of the month, of the week of, I know it's the month, that is of March. And in that case, it's 2.845 in the continuous contract. And then I'm suspecting that at some point we're going to see copper hit 2.51 or get very close to the 200-period moving average. That's really what I'm looking at. So I'm not doing fundamentals here. I'm doing technical analysis. If I put it together with the fundamentals and I put it together with what I'm looking at in the HGX, which is the Philadelphia Housing Sector Index, I have no choice but to continue saying that the lack of follow-through in the MACD in the monthly chart. Let me open this fully so that you can see what I'm looking at and why I'm looking at it. That, first of all, the high that was made. Remember, I have it on one of my computer disks or something that's something that I've saved from way back, but I'm not sure I can ever get it back because it's probably on a computer that I can't play it on. But I have had on record one of the Toll Brothers, I had Hovnanian, and there was a third one. It was either Pulte Homes or Meritage, I think it is. One of those. Right there at the very top. One was within 2 days of the exact top, back in July of 2005, of the HGX index at 293.66, talking about their backlog. See, that's the thing that makes me a little nervous about something like a Boeing. You can talk backlog, you can talk mega backlog. Countries change their mind. Sometimes they're quite prepared to give up deposits because they're not prepared to pay for the huge amount of money that they're paying for airplanes if their economies start to crater. And that's the same thing what happened in the housing market. So I have a tough time in the fundamentals other than saying I'm about to get, and then maybe it's a sell signal or something like that, and then I have to extrapolate from that. So now let's do this. The copper chart that we're looking at, the home builders that we're looking at right now, from the previous major peak back in 2007, there is, I'm not going to do a time price, I'm just going to do this trend line, this little thin rectangle at the top, this inflection point. We have not made, we can go to this bar, it's an unconventional cup and ladle pattern, and at this particular point, I really have no choice but to call this peak F at 213.81 made on the week of the 28th of February in the little cup formation, because the MACD was pulling back and the stochastic didn't come even close to the 90s that it was in when it was making that peak E at 210, the HGX Philadelphia Housing Sector Index back in May of 2013. I'm suspecting that we got a bit of a pull. We got at least a sideways to downward move right here. If the HGX trading at 199.44 right now, down $1.05, takes out 189.59, I'm going to say if it takes out 188, closes under that on a monthly basis, there's a good chance we're going to make a deeper cup. I don't know if we go all the way back to 164, but I absolutely think that if that's the case, we will be testing the 175s. So I just wanted to do that to show you how I'd like to take fundamental. I haven't spoken about the fundamentals. I've only spoken about the technicals. I'll put that together with the fundamentals in a minute of what I'm looking at in the housing market. I'll be back, and a question about IBB. Yep, good question on the IBB. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's down 29, S&P's down 3.5. So just 2 points here. One is that I'll get to the IBB. Just thinking about the housing. I don't know how to measure these things other than with my experience and a kind of a calculation that I make mentally all the time about different things. And what I perceive is there's a difference between what I believe is the intrinsic value of what I'm looking at, same as when you're looking at those contemporary paintings that sold for 80 million or whatever. The difference between what would be a more realistic and what is a price that is being accelerated away from that median line, or at least exaggerated median line, to an even greater exaggeration. And it's that emotional part. And that's what was going on with copper. That copper, the price of copper had gone beyond what at least I thought was its intrinsic value as I read it. And that's what I've been seeing now in the housing market in the Northeast area. So this is like the East Coast, Upper East Coast. And I'm seeing it in Boston, and I'm beginning to see that there are houses that are coming on the market that have some intrinsic flaw, like a two-family that is just a fabulous two-family, and then all of a sudden you find out that there's parking for one car and there's no street parking for the wintertime, which is just imperative. So there's a fault, there's a defect, there's something that this is the perfect time for selling something like that, not necessarily the perfect time for buying a problem like that, because when things get tough, people will step aside from anything with a real problem. So I'll articulate that as we move on through. There are plenty of weeks to go before we see anything really serious. I think on the downside, booming commercial real estate in Silicon Valley. That's a headline on CNBC. So this is not going to end very pretty. Last night I had the big clue that I've been looking for as to timing for real estate, and now I'm more convinced than ever that it can go into next year, the spring of next year, maybe the summer of next year. And then I think you've got to be real careful, but we'll deal with that as the time comes. Just right now, there's a little bit of a hiatus. And if you look at Lennar, L-E-N, very nice bounce, but so far it's a bounce. And it needs to do a little more until it can get into the U-shaped pattern and get into the 42s. That's at 40.72 LEN, down 12 cents. If it does that, that's going to be a good sign. So, and that's Lennar. Let's go to Toll Brothers, one of the major builders, home builders. Same thing with the monthly chart. It's gone to a peak D. It's consolidating, but the technicals are not that good in the monthly. Weekly technicals are also not good. So it's the daily that will hoist the price. And if the daily clears, it's at 36.14, down 7 cents. If the daily clears 37.20, that'll be very positive. Not very much, just over a point away. It should be able to do that. If it does that, then the home builders can come back on track, at least for a summer rally. So that's what I wanted to discuss now. The next thing was IBB, which is the iShares NASDAQ Biotechnology ETF, trading at 239 right now. It's made a peak C, but the big problem about this peak C is that it is within the context of an arch formation that had higher highs and higher lows. No, it had a very big move, then it consolidated and made further arch formations until it broke, and then it made higher highs and higher lows, going to a peak C at 242.28. There is a chance still that if the Dow closes today anywhere like -8 or +15, and the S&P is able to get it back on track. Funny how the Dow was lagging yesterday, now the S&P is lagging, and the S&P, the 500 index, is able to close down only a point or maybe even up 50 cents. That'll be very good. But if they close towards the low of the day today, that's going to be very important. Why? Because it will say an index like the IBB, funnily enough, the BIB, which is 200% long, has made a peak D. But both of them have very poor monthly charts. Weekly charts are struggling to get technical veracity. The MACD is not cross positive. It has made a leg B. A nice move from 207.48 to the most recent high of 242. I mean, we're talking 37 points here, 35 points. But way down from the 275.40. Remember, so I'm talking about it, so I may as well mention, in my opening call, we've been short from just about 3 points from the top all the way down, and periodically we've bought the inverted long side for trades, but we were still holding the core short position. It did go down to 207. That was a 67, 68 point decline. Huge, the biggest decline it's ever had. And now this is the bounce that we were anticipating. I think it's almost done, the bounce. So the question is, can it go to leg D? And the answer is, this is, yes, a retracement failure mode, number one. Number two is, it is also just nominally a stair-step higher and then it consolidates. Stair-step higher. The stochastic is at 87. MACD is good. And it's holding the 9-period moving average. I suspect it doesn't go much more than leg D, which would be above 242.28. But if it fails from here, which it can do, it means that if it takes out 235, closes under 235, that is, there's a good chance that this is a top that could see a pretty big pullback. So I just wanted to go through that. Now, IWM. IWM right now is trading at, so what I'd said to subscribers this morning, I showed this chart up to there. Let me explain what I'm looking at. I showed the chart in 3 time frames. And what I'd say that this candle here, let me make it nice and big so you can see, that candle is called, in my work, a Chapman wave Roman candle. Why? Because if the price trades down even to halfway into the candle, the lower wick of this candle, and I'd said if it goes under 111.60 something, there's a good chance it's going to test the bottom or even take it out. When it did exactly that. Yesterday's low was 111.36. Today it's at 111.12. So we're looking at the IWM fading miserably. And we had thought about going short the IWM through one of the inverted ETFs. Instead, we chose something else. Is that something else working? Yep, one long is working. That's good. And let me just quickly check if I can even find it here. Very nice. Yeah, and the short that we've got that we added this morning is working as well. So we are in the main mostly short. We have one long position. Thank goodness it's working at this particular point. And the bias has been to be looking to the short side. Whoops, I even forgot to look at one of those that we went short. Yeah, everything's working very nicely. Good. So now what I wanted to do is I wanted to talk about the market. In this 120-minute chart that I showed subscribers over the past couple of days, there's a pattern that we're very familiar with for those of you who know my work. It's the Chapman wave stalk leg formation. I'm talking about this for a long time, decades. It's a pattern that starts off, makes a number of peaks, but it's really a single leg up in the power of the move. Then it goes into an oval fashion, and you know how a stalk stands on one leg. It's got that long, wide, oval body, and somehow it manages to stand on this spindly little thin leg, raises the other leg, so it's only on one leg. And the next thing you know, it makes the oval pattern and then breaks out for the neck. Then you get the head, and I believe that that's what I'd said, that this is probably the head right here. And then on my other chart, I put beak. So we're going to be looking at this. Why? Because if the DIA breaks, it's at DIA, the Dow Spider, Dow Diamonds, it says 166.87 down 33. If it takes out the low of yesterday, which is 167.75, let's call it 166.66. If it closes underneath that, that is just a very, that says you've got the pattern and you should go into the body of the oval, and that's under 166.60. So let's go to our first caller. We've got Mike in Lakewood. Mike, how are you?
No, pretty good. How about you?
Very well, thank you.
Yeah, I want to know, would you short Brunswick, BC here?
Okay, so BC, at first I thought I thought it was British Columbia, but it isn't. We're looking at Brunswick called BC.
Brunswick, they bowling and boats. And
absolutely,
things like that.
yeah. And this is a stock that for years I've looked at and said we've got to own it, and I never put it into my opening call. Now it's a little late because it's made a peak. E in the weekly is making a potential oval pattern, but it is starting to make a lower lows, and it looks like it could be making lower highs. So the weekly is saying be careful because the MACD has just turned down. It's at a peak E with 4 months to go of the high. The on-balance volume hasn't given me the signal yet, but the stochastic is very weak at 72%. Then I'll look at the weekly chart. I remember this very well. There was this move that must have been a news-related move. I couldn't explain it on a chart basis because it went to a new high, other than to call it a rogue wave, perfect right arm extension plus a rogue wave move that came. It must have been news-related. I don't know what it was, but it started off BC Brunswick Corporation. The week of the 7th of February makes a low of 39.29. The previous low was at a peak E in the Chapman wave at 47.08 back in December of 2013. It starts a single leg up. Oh, was that a single leg? No. So it goes peak A, gray A, and then a brand new, once it goes above that 47.08 level, this is F/B, but it actually had all the characteristics with the MACD and stochastic of being a very ugly candle turnaround, which is exactly what happened at 47.69 the week of the 21st of March, and it pulls back. This is the question. It went to a lower low. That means that in the context that I would love to say it's making lower highs and lower lows, I can't say that because just snuck above that previous high, going to 47.69. So I have to now be a little patient in my technical assessment of it on price, but on my technical assessment of it on in the weekly chart, based on the MACD and the slow stochastic, if it at 42.16, if it closes under 41.59, now I'm going to the daily chart. If it closes under that, that's going to be a very interesting thing because the last low of 38.53 and then 38.46, that's A, B, C. That becomes a potential peak A, peak B, and that would be a potential peak C minus. And C minus is, if you know my work, a peak C minus failure pattern is very negative because invariably what you'd be looking at is a test of the previous lower troughs with a really good chance that if it broke 50% of the move that it just had to the upside, if it broke down 50%, it's going all the way back to the beginning. I had a question in the den. One of our denners, Tigers, wanted to know, Basil, please ask caller about his fundamental view of BC. Do you have a fundamental view? Is there another way that you're looking at this besides technically?
Well, basically, it's been up for a long time now, going up for about 2 years. And I think for the fundamentals, I don't think they're going to be selling a lot more boats. I don't think things are all that strong. So they've gone up on the hype, and it looks to me like that's starting to wear out. So on the fundamentals,
one thing I must say, I just wanted to mention while you're talking about it, I believe bowling alleys will be coming back. In fact, if I was younger, I'd probably want to start a bowling alley right here, as close as I could to Newton. And the reason being, I think parents are looking for safer outlets that aren't video games, etc. Somewhere where they can take the family, like the old days. You can have a night out, a quiet, safe night. Doesn't have to be quiet, but a safe night out. And I suspect that bowling is going to be it. And I see absolutely no reason why it shouldn't be very successful. It's a business venture, of course, so anything can happen. And that should be to their benefit because it just fits the scenario. You can have all the bells and whistles going on with lights and everything, but it's basically, it would be the same game. I don't know if they're doing that, but of course, I don't even know what percentage anymore it is, the bowling alleys, because it used to be big in the bowling world.
Well, that's the point. I don't disagree with you, but I don't see a lot of bowling alleys being built.
Okay, yeah, I got 80% of businesses, boats and engines, 5% is bowling. All right, they're not going to turn the company around.
That's the point.
Right. And, it's very interesting you mentioned that, because this is a period where theoretically the boating industry, I meant to go to the last one. It was after the auto show. It came to Boston. It was the boat, like they have the International Auto Show. They have the boat show. And I meant to go to it because I'm always fascinated in looking at what's going on. And I didn't go to it. But my suspicion was it was probably the most expansive, most expensive, and most innovative boat show that they've had in the Boston area in ever. But I don't know. So, yeah, hold on a second. I just wanted to give you my parameters for BC as we go after the break.
I'll hold on.
Okay, we've got Mike in Lakewood, California, holding on for BC.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, Basil Chapman, and don't forget, coming up after my show, you've got the Options Hour, and that should be a fabulous show, as always. Just a tremendous amount of information North gives you, and 2 things that go on. This is a perfect time to listen to North Van Hoosen, because what you've got is the potential for a turnaround in the market right here as we're speaking, because there are certain signs that I was looking at, and we've our bias is now to the short side, and I think you can make fairly tight stops, because if you're wrong by tomorrow afternoon or Thursday, what's tomorrow? Wednesday, yeah. Or Thursday, the market will have spiraled to new highs, and that's all there is to it. So when I listen to North, it's just a wealth of information. So Options Hour coming up. Now let's just go to what we're looking at here. The question was on BC Brunswick call. I'm going to make it real easy. I don't know if would you be going short? Do you have a position at all?
No
Mike?
position. I'm looking at going short. I would have actually liked to have done it a couple of days ago around 44, but I've missed that. So, but it looks to me like it's going down towards 38 to 39 right now.
So the way I'm looking at it, I would put a 1-point stop on the upside, 42.20. I'd put a 43.20, 43.40 stop. because I agree with you, the downside, if it breaks 41.50, somewhere around there, it should very quickly go down, and then you've got at least 2 points, but maybe 3 points to the downside. So your risk to reward is there, and I would even say to you that if it closes today towards the high of the day, and you were already in a short position, I'd just make the stop tomorrow very tight, because tomorrow should be the day that it continues down, or at very best it makes a little doji candle with nothing higher than, well, that would be more than 1 point. No, with nothing more than about 42.90 to 43.07, so you'll still be within that stop, the buy stop area. Anyway, that's what I'm looking at, but the MACD is still good, and that does allow for a slightly higher bounce if there's going to be a bounce. So I would keep it tight, because I wouldn't want more than a 1 point stop, for the simple reason, if it actually goes towards 43, 42, it could still make this peak C. But at this particular point, I have no qualms about putting it as a C1, peak C2, top in the Chapman wave, and there's no rule that says now it needs to go above the previous high of that doji candles 44.03 level. That's the way I'm looking at it. Or you could just not do anything right now. If it continues down, you say, okay, I've missed this particular leg, then you're going to have to wait for a pretty nice bounce back towards the, I'd say, if it hits the 41.60 200-period moving average and then has a decent bounce, it would be back somewhere where it was today, between 42 and 42 and 3/4, something like that, 42.67. So this is the area within a point and a quarter that I think it should give you a lot of information about going down further or just going sideways for a little bit longer. But everything about it says it does look like it wants to pull back because of the technicals, both in the monthly and in the weekly charts. So I hope that helps you.
Thank you very much. See you later. Bye.
Thank you very much for calling. Always appreciate your calls. So, folks, let's do this now. We're going to go back to this chart here. This chart was the 120-minute chart. So we've done the neck, we've done the head, and we're in the process maybe of making the beak. We'll see. That's the 120-minute chart. Now let's look. Is that music? Oh, show's over. Let's make it real simple. If the VIX starts to move towards 12.25 this afternoon, this market will go down even further. And watch Dow, 16,670 is below that, and I think we've made at least a short-term top. Hey, thanks for being here, everybody, and I'll be back later today with Tom O'Brien. Otherwise, I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.